Well, for starters, the SJX Nifty is indicating that we're likely to start up with a sharp downtick, maybe in fact lower circuit as well, is something that we could be looking at. I hate to say that, but that's what it's indicating right now. And the level that you need to watch is the 10% from Friday's close. So that's around 7,871 odd. That's the mark that you should be looking at. If that happens, then in fact we'll be, pause for trade as we saw on the 13th of March itself. But bearish cues to kickstart trade today. The Dow, remember, ended with a sharp cut. The Indian economy, there's a lockdown across India or most of the districts. And on the back of that, we are seeing selling pressure. Remember, the coronavirus cases as well have been moving up over the weekend or so. So that as well is definitely not good news for mankind as well as for the markets as well. Well, Friday belonged to the bulls. We had the biggest one-day gain that we saw in the last 6 months, but the week belonged to the bears because the Nifty was down close to around 12%, the Nifty Bank was down nearly around 20%, and the mid-cap index as well did see a lot of selling. Institutional activity, that's something that we've been tracking very, very closely. The FIs, yet again, they sold close to around 3,300 crores odd. The DIs, they're doing their bit. They pumped it earlier around 2,400 crores odd. But net, the FI is selling and the DI buying. If you net it off, it's nearly around 800 crores in terms of an institutional net sell number. The FIs are selling in the cash market, but in the futures and options space, well, they're taking some contra positions because they added longs on index futures. Now, in fact, the long positions are the highest we've seen in this entire month as a percentage of, the total positions on index futures. They bought more calls and puts, and they're writing puts as well. Now, all of that is likely to unwind today given the kind of start we are staring at. The key level on the downside, last week's low, 7,832. Some would have thought that maybe, in fact, the bulls will try to give this a bit of a fight, and I think they will try to as well. But the key focus as well is going to be what is the government of India and the Reserve Bank of India going to do to help the economy revive? Because SEBI has introduced some measures that's mostly going to curb market volatility, maybe make selling, shorting a little bit more difficult. But measures from the government of India and the Reserve Bank of India, that's something that the market will track very, very closely. Let's move to some stocks in news. Then Ipca Laboratories. Now, the US FDA has made an exception in terms of an import alert on one of their API facilities as well as the formulation facility. And last week itself, we were talking about chloroquine phosphate. That's an API that's manufactured at their Ratlam API plant, as well as hydroxy chloroquine sulfate, that's the other one as well. Both those two drugs, remember, they're seeing a lot of demand. And last week, President Trump as well has said that chloroquine is continued to be studied as a potential, drug that can be used against COVID-19. So we'll have to keep an eye out on Ipca Laboratories. Sticking to the pharma space, though, Dr. Labs Laboratories, you have Metropolis, Thyrocare, Fortis, all of them will be in focus because now the government has allowed private labs to go ahead and conduct testing, but they've capped it at around 4,500 rupees. So those stocks will be in focus. Interesting to see the reaction we get out of there. But from the auto pack, you have Tata Motors. They have gone ahead. They have shut down their facility in the United Kingdom, the JLR facility. So we'll keep an eye on all the auto stocks because you have Eicher Motors, Mahindra & Mahindra, Maruti, Hyundai. They have suspended operations for the next week or so. So auto pack in focus. Welspun Corp, we know they have a large amount of exposure to the oil and gas space. And now, for investors, their worst fear has come through because the orders placed for the US facility, they have been deferred. That was close to around 158,000 tons. So not good news, though they say they still have a decent order book. The stock has got a bashing, and today as well should see some selling. India Bulls Housing Finance, very, very volatile stock. Promoter Samir Gehlot went ahead and bought 35 lakh shares. That could explain why we had a bit of a bounce in the last couple of trading sessions. And buyback news, Motilal Oswal, they have gone ahead and they have declared their buyback. Not a very large one. The promoters will not participate. Dalmia Bharat, same is the case out there. Not a very, very large buyback, but promoters will not participate there as well. And Ramkrishna Forgings as well. They have gone ahead and, they as well have announced a buyback. And finally, Ashok Leyland. In this sort of a market condition, when you go ahead, when the listed entity goes and buys a stake from the promoter entity, it wasn't taken very, very well last week itself. But now that's been scaled down. They'll be buying only around 7% in their subsidiary in comparison to 19% earlier. But let's move on then. Market regulator SEBI has announced a slew of measures to curb market volatility, and this will be effective from the start of trade today. Anuj joins us to fill us in with his reading of all of this. Hi Anuj, good morning.
Good morning, Nigel. So, before I talk about that, I just want to make a point here that the SGX Nifty is indicating a bit of a circuit down possibility. And I think our market is reacting more because of the recent, all the talks about whether the market should be shut or not. All this talk about whether short covering should be banned or not. I think all of this has also disturbed the market equilibrium a bit, and that's why you're seeing this kind of move on the market. As far as these SEBI's moves are concerned, look, I think I'm sure there would have been some bit of clamoring for short cover for banning shorts. SEBI has not done that, and that's a welcome move because you can't ban short selling in a market like India. That's always counterproductive. So they have not done that. What they've done though is that for a lot of stocks where there was indiscriminate shorting, they have changed some criteria. All of a sudden today you have seen 8 stocks enter F&O ban. Why has that happened? Because the market-wide position limit has been brought down to 50% in a lot of volatile names. So all of a sudden PVR, so many stocks, Yes Bank have entered, NCC have entered F&O ban. So what would happen is that in a lot of stocks where there was just indiscriminate shorting and just hammering of the stock prices, there could be some short covering. But eventually stocks will find their levels. Stocks don't go down only because they're shorting. People short stocks because they think they're weak stocks and they have reasons to go down. On the index, what the SEBI has done is that you can't take naked shorts for either trading member or FIIs or DIIs unless you have portfolio positioning of that much amount. However, 500 crores is the limit. So for a normal trader, for an HNI trader, life is unchanged because 500 crores is not the kind of trade that you take. Most traders would take trades at best worth 50 to 60 crores. So if you're taking a trade which is more than 500 crores and is not backed by portfolio, in that case the margins go up by 2 or 3 times. So in effect, shorting is getting a bit tougher, but it's not getting banned. I think that's good news. But I think that might be a sideshow today because the frontline show is what's happening with the SGX Nifty. Let's see if that holds or not, because all of a sudden there's a lot of weakness in big names like HDFC Bank, etc.
All right, Anuj, thanks so much for joining in and filling us in with your quick take on what SEBI had to do on Friday's trading session. Well, let's move on then. In order to ensure there's no liquidity crunch in the market, the Reserve Bank of India has decided to infuse more money. Now, the RBI will purchase bonds worth around 30,000 crore rupees by the end of this month. This is in addition to the 10,000 crore bond buying exercise the central bank had announced earlier last week. Well, on that note, we'll slip into a short break. You come back, we'll get you more cues coming in from the derivatives market. Stay with us.